You finally landed that first big job offer, or closed your first major freelance deal online. You click accept, and suddenly you're earning real money. But then, a few weeks later, that first payday arrives. You look at your bank account, and the deposit is significantly lower than the salary you were promised. That gap comes down to two very different numbers. Your gross income is the total amount you earn on paper, but before you see a single cent, a series of deductions are sliced away. What you're left with is your net income, your take-home pay. It's tempting to look at those deductions and assume your money has simply vanished into an arbitrary bureaucratic void. In reality, governments collect these compulsory financial contributions to fund the shared essentials we all rely on, things like paved roads, public schools, and functioning hospitals. Understanding the difference between the figure on your contract and the one that actually hits your bank account is the first step in building a budget based on reality. The largest deduction you'll usually see on that payslip is income tax. Across most of the European Union, this is calculated using a progressive system. Think of your income as water filling vertical buckets. Low earners pay a smaller percentage because their money only fills the bottom buckets. Higher earners pay a higher percentage, but only on the money that spills into those upper brackets. Right below income tax, you'll find a second major deduction, Social Security contributions. Social Security is an earmarked payment into your personal protection system, separating it from the general taxes used for public works. By paying in, you accumulate benefit credits. These credits secure your right to future pensions, subsidized healthcare, and financial support if you ever need sick leave or unemployment benefits. Even a summer part-time job starts building this record. Monitoring these contributions means verifying that your personal safety net is actively growing. Taxation follows you from the workplace to the storefront, shifting from a deduction on your income to an added cost on your purchases, known as value-added tax, or VAT. That is a consumption tax. You rarely see it as a separate line item because it is automatically embedded into the final price of almost everything you buy, from a morning coffee to a new laptop. The government requires businesses to collect this tax at every stage of the supply chain. A manufacturer passes the cost to a wholesaler, who passes it to a retailer. Ultimately, the final consumer absorbs the total accumulated cost. Governments also use consumption taxes to directly price environmental damage into the goods we buy. Carbon taxes on fossil fuels and vehicle registration fees based on emissions make polluting activities more expensive, actively nudging consumers toward greener, more efficient lifestyle choices. Factoring these indirect costs into your budget reveals exactly how national policies shape the actual price of your daily habits. These rules apply far beyond traditional employment. The digital economy has opened massive new revenue streams, and tax authorities monitor gig work, brand deals, and online trading closely. If you buy an asset like real estate, stocks, or cryptocurrency, and later sell it for more than your purchase price, you trigger capital gains tax on the profit. Many young investors buy and sell digital coins on their phones, entirely unaware that each profitable trade creates a legal obligation to declare that income. Or consider Marco, a 22-year-old in Portugal who recently turned his freelance graphic design work into a full-time digital branding agency. To operate legally, Marco had to register for self-employment tax, begin tracking the VAT on his software and equipment purchases, and automatically set aside 25% of his digital income to cover his quarterly tax dues. By anticipating these obligations, Marco ensured his freelance work could safely scale into a fully legitimate business without the risk of sudden crippling fines. Zooming out from individual businesses, these national rules are deeply integrated into a highly coordinated European network. Under the EU's DAC 3 directive, member states automatically exchange tax information across borders. This shared database creates a transparent system designed to catch evasion and cross-border fraud. To navigate this system effectively, you have specific practical duties. You need to keep accurate records of your earnings, hold on to business receipts, and file your annual tax returns on time. Meeting these requirements keeps you clear of heavy legal penalties, but it also works in your favor. Filing a return is the only way to claim back money if you've overpaid due to an incorrect tax code. Participating in this system is an active contribution. The money you pay builds the infrastructure, schools, and hospitals that define your community. Mastering the mechanics of taxation gives you confidence to maximize legal deductions, claim social benefits, and engage responsibly with the society you help fund.